Hello, good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain. For now, the market continues to be in the red. That's been the nature of the market throughout the trading session. In fact, we have been, edging lower, and right now at the lowest point of the trading session, threatening to go below the mark of 24,300. And it's just been a matter of couple of days, and we have seen massive volatility within that. So on Friday itself, we had seen a sharp dip of around 250 points, wherein 24,400 was broken on the downside. We recovered, went very close to 24,800, and now we are back to those 24,300 levels. So definite, resistance which is there. It's not a secular move. It's not a runaway rally at all. And even FII flows have been dwindling off late. We have been seeing sell figures come by, even though just small three figures numbers, but nonetheless, there is that nervousness which is there. Call it perhaps what's happening to Dow, which has been on the back foot for 8 straight days, the longest losing streak since 2018. Or the fact that FOMC meeting is just around the corner and maybe the positions are expected to be light around that. But there's definitely something which is on the mind of traders and investors, not looking at making a large bet. And I think that is how you'll describe the market right now, Kunal. Not willing to make up its mind, not going in unidirection. There's just very, very sideways at this point of time.
Not sideways, I'll call it a correction of sorts today, because after that Friday's correction in the intraday pickup, it was assumed that maybe the markets would probably get back into a drift or a trading range, and the range could be a lot more narrow, because that's typically what happens. Because when the index forms a critical low, bounces back quite sharply, then it gets back into a zone of consolidation. But that lasted for just one day when we look at today's price action, and we are back again towards retesting the lows for the Friday, almost there for the indices. Now, if you manage to break and sustain below this level of 24,300, for example, for the index, then I believe that there could be some stronger chances of the index falling down further. Now, the data point which I was looking at across the globe, which I think is now moving not in favor for markets, is a dollar index, which is back again to that 107 plus mark. I think that could be one of the major reasons why our markets are getting a lot more nervous. And of course, the India VIX, which is spiking back again to that 15 mark, 14.775 thereabouts for the India VIX. That's also another reason why I would believe that this volatility could be here to sustain.
Volatility is here to stay. Let's take a look at India VIX as well quickly. So yes, that's up around 5%, and that's the point that Kunal was making. But Nuresh also with us. Nuresh, would you concur a definite breakdown today? And if yes, what's the floor and what's the high for the markets that we'll be toying in between that range for?
So for now, it has become a case wherein we see volatility on the day of expiry. So we saw it the day before Thursday. That was when we had a range of 24,300 on the downside, 24,850. Did nothing for the next 5 sessions. Again, we saw last Friday a move from 24,200 bottoms to 24,850, and we are now again drifting lower. So till the time we don't sustain below those lows of 24,200, 300, this remains a range-bound market with a lot of choppiness, with no follow-up moves happening anywhere on the index names. But if you look at the small cap, mid cap, it has been pretty flat for the last 3 sessions. So overall, it's a trading band which we are 24,200, 300 on the downside, 24,800, 900 on the upside. Once we get a closing beyond this range, then we get a 500 pointer move. Till that point of time, it's tough to trade.
Tough to trade, so sit on the sidelines. But Devin Choksi also with us on the show. Devin, are you doing the same, sitting on the sidelines, or you're identifying opportunities to deploy money now?
Yeah, good afternoon. Obviously, I think this is a time when market gives you opportunity to invest into. And some of the good quality stocks which are looking fundamentally stronger, they are now started available at a lower price, and they are not necessarily momentum driven stocks, but I think they are value driven stocks. So we definitely consider them into the portfolio. In fact, I think we have been gradually adding them into the portfolio of even customers also, because we believe that I think it is this time, the corrective time, when some of the good quality stocks are available at a lower price, are making more sense to, they make more sense to add them into the portfolio. Fortunately, the corporate fundamentals are not so bad as much as I think the pressure in the market is. And pressure in the market is also, I think, largely in the frontline stocks, where I think the portfolio shift is taking place from selling the frontline stocks and going into the IPO. The huge pipeline of IPO, which is basically, I think, creating the pressure in the market, wherein institutional investors included, selling the portfolio stocks and probably, I think, keeping money free for investing into the IPO stocks. So that's where probably I think the shift is taking place, and that is the reason for which some of the index-heavy stocks like Reliance have cracked, and they are actually putting at a lower price compared to their fundamental strength. So in my viewpoint, I think this is purely a technical way of I think looking at the market. Fundamentals remain intact as far as I think the business is concerned for most of the companies.
But even there is a bit of a debt issue in Reliance. They were supposed to be a net debt zero company. Look at the debt. They are still in an incubation stage where the green energy businesses would continue to suck out a lot of capital. So that is the puzzle, Devin Bhai, that Reliance, what it had indicated versus where it stands now, there is a big difference.
Yeah, Nikunj, I think I totally agree with your observations on one side, but at the same time, I think they're building much larger business franchisee in form of renewables. If they have indicated that they would be investing 75,000 crores of rupees into the renewables, it was indicated to invest, I think, over a period of time. And that is basically generated out of the cash balance sheet which they have in the books, cash that they have in the books, I think, from different other verticals. So that is where I think they're infusing money and investing it. Market is probably aware about it. According to me, I think the market is wanting to see the clarity on two counts. On one important count, when exactly the Geo platform and the Reliance retail companies are going to monetize itself. I think that is what the market is asking for. That clarity is not forthcoming. Because that clarity is not forthcoming, the investors who have been long investor in the company have been, I think, trying to get out of this position and probably, I think, shift money to some of the faster moving ideas. If that clarity comes to me, I think the Reliance would fundamentally get re-rated from where it is currently quoting at, because the rest of the fundamentals, as far as the business is concerned, they remain as strong as ever. And at the same time, I think the renewable part of the business, which they are building end to end by, I think they're waiting, market is waiting for some proper announcement to come, which was expected to happen, I think, by the end of this month. So that is where I think market is keeping an eye on right now.
Devin, what's the view on Shriram Finance? Can't find a reason as to why it's down 5%.
Sorry, which company did you mention?
Shriram Finance.
Well, I don't think that I think there is any particular reason at this point of time that I could think of, except the fact that the rate cut scenario, which we are all talking about, is not starting to happen before February 2025. And as we do understand, the rate reduction cycle, they normally, I think, walk till about 6 quarters. In fact, in a gradual manner, I think first when the rate reduction takes place, I think the lending rates would probably come down after a lag of 2 quarters. So certainly the full impact in the economy of the rate reduction is also being talked about, that in 2025, either in the second quarter or third quarter, if they reduce the rate or start reducing the rate in February, the full impact would start getting reflected somewhere in the second and the third quarter of 2025 calendar year. So that's why probably some of the financial companies are remaining under pressure. Once again, the situation is same, that most of the fund investors believe that as of now, I think there is no runway look. As of now, I think there is no clarity about the rate cut. And at the same time, I think the price appreciation of the stocks in the market. So it is better to shift money from a particular sector or a stock into the IPO, because I think that gives you the faster ability to produce returns, I think, by way of flipping the IPO post listing.
Okay. Just scanning through what essentially is there in terms of the auto pack, and that's where I think we've seen some reversals. And Naresh, autos are leading the market decline now. Will it be a fair statement?
So they've been drifting lower. The correction is already done in a lot of names, and now it's a slow drift. So if you look at a Bajaj Auto, the stock has fallen from 12,500 levels to sub 9,000. And this is where it was in the, say, month of March, April. So it's lost out the whole move which happened in the last 6-8 months. And if you were to look up Tata Motors, the stock has corrected from almost 1,100 to 1,150 levels, all the way down to sub 800 levels. So the last move which we got in autos, say from Jan to March of this year till now, has been faded off. And in this case, after such a correction, I would expect a consolidation. So for now, the leading part on the downside is done. We would just get into a sideways band. Say maybe Tata Motors consolidates between 750 to 820. And then comes the next move. And exactly is the case with majority of the auto names, apart from Mahindra and Mahindra and Eicher Motors, which have been relatively stable.
Devin, what's your view on Mahindra and Mahindra? Do you think this entire SUV success story is now slightly overdone? I was looking at some numbers. Mahindra and Mahindra's market share 55%. And typically when you are above 50% in any category, your market share tends to come down rather than go higher.
Yes, I think a pertinent observation, Nikunj, I must say. I think the important part is that at this level, I think further amount of acquiring the market share is becoming a little bit more challenging. Having said that, I think in the current portfolio of products, I think they have been extremely successful with the amount of money that they have been collecting in advance and the vehicles which has been delivered in the post period of taking advance of 6, 9, and 12 months. So they've been extremely successful, and that is fueling the entire growth, which in last 2 years or 3 years we have seen in this company. To me, immediately, I think there is nothing going to stop for Mahindra & Mahindra. In fact, I think the next year when they will have the full electric vehicle rather, I think which will come up, that is also expected to, I think, invite larger amount of interest from the customers as a whole. But everything is in price. I think the last point I think which one can always add is that everything is in price. If the stock is quoting at a valuation, which is according to me, I think is reflecting the growth that they are assuming at this point of time. And further growth to come on the top of it, I think definitely the pressure will be there because I think they are already above 50% market share in the SUV category of vehicles.
Anisha, I'm looking at this entire interplay between diamond versus gold, and look at Senco, look at PN Gadgil. People are buying jewelry, but they are buying gold jewelry more because gold prices have gone higher, gold imports have gone higher. And look at Senco, what a table thumping response for a company which went public in 2023. It's 3x from there.
Yeah.
Even Kalyan Jewelers, PN Gadgil, I think they just went public a couple of months ago.
Yeah, PN Gadgil was just a few months ago. Yeah.
So diamonds are
last 3
girls'
months.
best friends, but gold is the necessity which everybody wants to buy in this festival season. Look at it. So even by Indians are buying, the shine of diamond is going away, but the glitter of gold is evident.
I think
your expression tells me that घर में भी ऐसा ही हुआ है, right? Mr. Choksi is buying diamond jewelry only or gold jewelry.
कोई पूछता नहीं हमें लेने के पहले, so that is the stat saga.
नहीं हम आपसे हमेशा पूछते हैं क्या स्टॉक लेने का, देखो ऐसे मत बोलो.
So I think the wedding season is basically responsible for the higher numbers at the same time. On one side, I think the gold prices are remaining at the higher level. On the other side, the consumer is having money in hands to spend. And that's where probably I think you are seeing the fantastic festive season, which is basically benefiting some of these companies. Whether I think there is an opportunity in investing into them, I'm not too sure. Whether there is a momentum into them, and definitely there is. Because I think the opportunity for investment would be there when you see the valuations are also correspondingly available to you, to your advantage when you want to invest. Here in this case, most of the things as far as growth is concerned in many of these companies, everything is being fully factored in. And maybe I think there is not even a slightest of what you call the margin of safety available in the price today. If at all, I think some of these companies would slip from the level at which they are. Probably, I think this is going to be a challenge. In fact, I think we typically say, though I'm not an expert on the gold subject, but we typically say that when you are, I think, trading into the gold-related activities, I think it is the time, at the time of Dhuleti, I think you end up buying, and at the time of Dhanteras, you should be selling. That is how I think you normally do, but I think that is not something which easily work, I think, in this kind of environment. But these are the limited points. I think the valuations probably, I think, are not immediately convincing to me.
Taken. So that's a view coming in on some of the jewelry names and how gold has had an impact, and the jewelers, of course, at that. A quick look at the market before we slip into a short break. So Quest Corp continues to do well. There's a bit of a perk up on Mazgaon Dock as well. Watching out for that one. And on the losing side, Blue Star has taken a bit of a knock, 4% lower. No incremental news flow as such, but we'll try to track that and more on the other side of the short break.
We were discussing Reliance in the break with Kunal as to what's gone wrong here and why it is falling the way it is falling. Frankly, the mid and the small cap stocks have not done bad for themselves. If one looks at where they stand, it's not like on a day like today when Nifty is down 1.5%, the small cap index is down only 0.25%. a little over 0.5% now. Naresh, I've always seen that historically when a trending market reverses, it starts with large cap stocks and then it moves into mid cap and then small cap and then into trader dominated stocks. Are we in for that reversal of everything in the market which picked up from November end, or this is like a one-day pause and it could be back to winning days?
So we are in a market where it's almost a divergence across the space. It is very similar to what happened in 2021-23 or say 2015-16. After the initial correction on the index, there was a huge rotation in terms of sectors, etc. So even now, if you look at it, the large caps have not just come back. So say Reliance Industries for now is still around 20-25% from the top. And even the Nifty 50 equal weight has not really made a comeback. So it's all Nifty 50, 100 names which have not made a comeback, but the small cap index made a new high. So I believe this could continue for some time unless we start breaking those 23,200 mark. Then that is the time where small caps will really take a knock. Unless we not break the recent lows, we'll continue to see stock specific action on the mid cap, small cap side.
Okay, point taken. Talking about stock specific, Devyani International is perking up as we speak. Let's pull up the intraday chart and see what that stock is up to, because the market is otherwise weak, but that stock has managed to inch up. But separately, a lot of exclusives coming our way, and our colleagues have been talking about how in this next budget consultation, perhaps there is some sort of leeway expected when it comes to the steel sector. Let me take it across to my colleague Prakash, who's joining us with the latest on this one. Prakash, what exactly is expected for the steel sector in the budget?
Yes, we are learning from our sources that the big relief expected for the steel sector in the upcoming budget. We are given to understand that the government is likely to rationalize basic custom duty on various raw materials used in the steel sector. We are given to understand that the finance ministry is considering the proposal made by the industry, and the idea is to rationalize basic custom duty to provide affordable raw material to the industry. We are given to understand that the basic custom duty, that is BCD, on coking coal is likely to be reduced to nil from 2.5%. As you are aware, that the country is largely dependent on imports to meet domestic requirement when it comes to coking coal, and therefore industry has approached government to reduce basic custom duty to nil from existing 2.5%. Along with that, the industry is also of the view that basic custom duty on imports from certain countries through FTA has already been exempted, and therefore it is time for the government to exempt basic custom duty on imports from all countries when it comes to coking coal. In addition to that, we are also learning from our sources that the basic custom duty on ferroniobium is likely to be reduced to nil from existing 5%. Industry has also asked government to reduce basic custom duty on rolls to nil from 7.5%. In addition to that, basic custom duty on refractory materials is recommended to be reduced to nil from existing 7.5%. So these are the wider recommendations when it comes to basic custom duty on various raw materials used in the steel sector. When it comes to aluminium sector, we are given to understand that the industry has urged government to declare the road-tip rates for the aluminium sector, ACZ and UAEUs. These are the major recommendations made by the industry to the government.
Devan, is there a case to buy into metal stocks, because now excesses have been created on the downside, which is that demand is low, stocks have done nothing, China is coming back, interest rates are moving down. Is it a good time to trade back into metals?
In fact, indeed, Nikunj, I think we are extremely bullish on the prospects going forward for the metals as commodity, ferrous and non-ferrous both. I think the important trigger points that we have calculated out here. On one side, structurally, the energy cost is coming down. Should the war-related situation get over or come under control or maybe get reduced, whatever you call it as, I think this is going to be further adding into it. Plus, I think most of the companies have also started mixing the green power into their power requirement in the energy space. Though it may not be substantial percentage at this point of time, I think as far as their production requirement is concerned. But in my viewpoint, I think with the mix of green power coming in, one would definitely expect that I think the cost would remain under control. And on the other side, I think given the kind of growth momentum that we are seeing in the economy because of the infrastructure spending, the requirement for steel, in particular steel, I think is remaining very, very high. Should I think the war affected areas, I think get into the construction, globally the steel demand is expected to move. A commodity business, this is always uncertainty with the timing part, but structurally as a direction, we believe that I think this is probably a good time to buy into some of the good quality names in the portfolio.
Okay, good quality names is something that you can buy into. The metal stocks, that's the word coming in as far as that sector is concerned at this point of time. Separately, just watching out for some of the other big buzzers. Of course, Piramal Pharma, Quest Corp is something that we have discussed in detail. But the other space which is doing quite well is the Alcobev industry of late. United Spirits has been having a good run. And separately, Oberoi Realty. These two stocks have been consistently moving higher. Nuresh, on the charts, would you expect a further up move? And maybe we should pull up a 5-day chart of these stocks to see how exactly have they moved up.
So, Oberoi Realty has actually moved up post the entry also into derivatives. The stock has broken out above the 2050 mark. We saw some brokerage updates also, and now the stock has come up to almost 2300. So, a 10-15% move done post the breakout. I would expect a pause rather than a further up move, and it's been an uptrend all through the last 2 years. But it's been a slow and steady uptrend, and it has a tendency to pause. So, I would expect a pause with a base shifting higher. So now the new range becomes 2000 to 2300. Earlier it was 1700 to 2000. So I would expect some range bound moves in Oberoi Realty as such.
Kunal, can real estate stocks buck the trend? Because in this decline also they've really bucked the trend.
Yeah, they've bucked the trend, but I think at one point of time when the risk of sentiment happens again into the markets, you would probably want to book profits into many of these counters as well as sectors which have rallied up significantly high, and then the markets get back into a mean reversion phase, especially in terms of these sectors. So there could be few stocks within this space which could probably outperform. Oberoi Realty, for example, is one of the strongest name in the pack so far. You've seen DLF. I think if I'm not wrong, it's still down 10% from its previous life highs of 900 plus levels. Then you have Godrej Properties, which is still down 15% from its previous life highs. So there are few stocks which have outperformed in this leg of uptrend within the real estate pack, and there are few stocks within the pack which have underperformed significantly than the entire sector. So I think in that aspect, you might probably expect that maybe some trim off could happen into the space. But largely, I think if these stocks, and where I look at it from the last 3 months perspective, that even in the heat of the market volatility in the month of September, October, November, stocks like Oberoi Realty, Anantraj, etc., they could withstand the kind of volatility and come back again to the life highs and keep on moving up higher. So I think in that aspect, the trend would continue for these stocks selectively, but not very, very bullish on the entire rest of the underperforming real estate pack as such.
Devan, where are you on this entire solar theme? Suddenly anything which has got to do with solar roof, solar panels, solar EPC is in demand. I mean, winter may be approaching, but the sun is shining bright for this sector.
Well, I think there is a reason to remain, bullish about the prospects going forward as well. On one side, the government is spending money. The renewable power plants are coming up, solar, wind, combined also included. I think they are coming up. And that's where probably I think the demand for implementation of the projects will also remain high. So if you had to categorize in buckets, I think probably if on one side you have the power producers using the renewables and the distribution of the power, there would be, I think, on one side, which are capital intensive businesses, which are infrastructure businesses. On the other side, I think whole lot of ancillaries, starting from the design company to the product manufacturing companies, I think would be there. Unfortunately, I think the market is pricing them significantly higher as a premium level. And maybe I think 2026-27 valuations are discounted at this point of time in most of the companies' cases. That's what is not comfortable. If the businesses are doing well, they are going to deliver well, that's understood, and some premium definitely is justified. But today the premium, I think, is flying through the roof. And that's where probably I think one is not fully convinced, even though the fundamental prospects remains extremely high for this business at the same time.
The prospects look bright as far as this sector is concerned. Thanks, Devin, for making time and speaking with us today. For now, the market is trending lower, holding on to 300 for what it's worth. But let's see whether the next 30 minutes we're able to do that or not. A short break, and we'll be right back. Welcome back. Well, we have been talking about United Spirits. Yesterday it was up 4-5%. Today it inched higher. What exactly is the latest coming in on that one? Macquarie has actually written a note and a channel check on the same. Let me take it across to Ashesha to get the understanding as to what they are picking up. Ashesha.
Well, yes, Macquarie believes demand trends have been very strong in the third quarter so far. They believe winter season and festive season have aided demand, and that is why they continue to remain very positive. In fact, they say Karnataka market, which recently lowered taxes on select categories, also continues to do very good for the company. Andhra Pradesh market, which recently opened up, also continues to remain very strong. They say opening up of Andhra Pradesh market and improvement in operating environment in Punjab should also aid volume growth for United Spirits in this quarter and in the coming quarters. In fact, Macquarie expects about 13% sales growth and 20% EBITDA growth on a YOY basis in the third quarter of FY25. They say demand trends could drive about 10.5% YOY growth as far as volumes are concerned versus a 4% decline that the company had reported in the second quarter. Remember, company had reported very weak set of numbers in the second quarter, and now Macquarie expects a rebound in the third quarter on the back of very strong volume growth that the company could possibly report. Standalone EBITDA margin, meanwhile, could largely remain steady on a sequential basis, but demand trends have been very solid, and channel checks suggest that on account of festive season and winter, demand is expected to see a big bounce up in the third quarter so far.
Watch out for United Spirits. Macquarie, of course, believes Q3 is expected to be strong. Let's see whether that plays out or not. But separately, apart from, Alcobev, we are also keeping an eye on the sky. And I'm not just talking about the weather and what's happening in the NCR region with respect to the coal. I'm talking about perhaps if you're likely to see the comeback of another aviation company or not, because of late the airfares have really shot up, and that's because there aren't many players left in the skies to that extent. But SpiceJet is now getting ready for a revamp. In fact, my colleague Samir has picked up these exclusive details on that one. Okay, we'll try and get Samir also to talk to us about that. But remember, of course, the company has done the QIP. They had done the fundraise. The expectation was that they're going to come up with some more, aircrafts perhaps that are going to fly more passengers. And we'll see increased frequency for some of these sectors. But let's see whether that happens or not. But on the aviation sector, at least, Indigo is something which is has been doing okay, and SpiceJet is the other one. Naresh, would you have a view on the chart of either of the two names?
So it would be Indigo. That's the one which has clearly shown relative strength all through the current correction as well as over the last 1 year. The stock, after correcting from 5,000 odd levels to 3,800, has slowly come back towards 4,500 odd levels. For now, it looks like a consolidation in play, wherein 4,550, 4,600 could be a resistance and 4,200 could be a support. So on dips to 4,200 would be a buying opportunity. I would expect to slowly again go back to 5,000 odd levels.
Okay. Ajay Bagga is ready. Let's connect with him and let's connect the dots here to understand what he makes of the current market setup. Last time it was a red tie, today it's a yellow tie. We want to see a green tie. Everybody wants to see a green tie today. Markets are down 1.5%, Ajay.
Yeah, this always works. It doesn't make for great TV. It jars on TV, but this color works overall. It can show your neutrality.
The TV tricks now, Ajay.
Sorry,
no, I'm saying you've learned the TV tricks now.
Yeah, one has grown up with you on the medium. I think I would have crossed about 8,000 shows overall. So learned a little bit, not an expert like all of you.
8,000 shows, man. I don't know. I mean, are you trying to tell me I'm that old? Okay, we'll talk about our my whole friendship with Ajay perhaps some other time. But right now, let's talk about markets. And Ajay, what could influence the script of how markets would move now for next quarter or so? Will it be Fed? Will it be Donald Trump? Will it be earnings? Will it be budget?
Yep. If I could get an option from you, Nikunj, for old time's sake, to say all of the above. But I think the biggest factor globally will be the Trump presidency. Now, is a lot of it already baked in? That's the big question. Has the market priced in? Because Trump at the end is a pragmatist. He's an opportunist. It's not necessary that the stated policies will actually come through. Most of the statements are a negotiating gambit. So you throw down your cards and you wait for the opponent to show their cards, and then he makes a different play after that. So it's a wait and watch. Markets have priced in one level of Trump moves post Jan 20th. But let's see what actually comes. That could surprise. So that's one. As far as the Fed goes, Nikunj, rate cut tomorrow and then a pause probably. Trump wants a weaker dollar, but the markets might not deliver that to him, given all the trends that are going into a dollar strength. In fact, we are looking at parity with the euro coming for the dollar within next year. It's already gone from 1.1 to 1.05, and you could probably see a 1:1. So a stronger dollar, which Trump won't like, but you're not getting a Plaza Accord, what Reagan was able to do, and which really brought down the Japanese economies. If you look at the Communist Party meetings in China, they keep saying that we are not the Japanese, we will not do a Plaza Accord, and they have been depreciating their currency. So second would be the Fed. Then coming to us domestically, it's going to be one more challenging earnings quarter, Nikunj. Both the GDP as well as the management guidances that are coming out not looking too good. So we are going to see underwhelming earnings once more for this quarter, which will start coming in by the second week. And fourth, then the budget. Budget becomes important because this has been an year which has, again, sorry to use the same word again, but underwhelming year economically, because the counter-cyclical moves that were expected, both on the fiscal and monetary side, did not happen. RBI tried to defend the rupee using a $50 billion of FX reserves when all the other currencies were depreciating against the dollar much more strongly. And that has come through in the November merchandise trade gap of 37 billion. So that has been a difficult exercise by the RBI. Secondly, it took out liquidity from the money markets, which becomes a restrictive monetary policy then. And on top of that, you did not cut rates. So there was no counter-cyclical move on the monetary side. On the fiscal side, we did not spend. So 4 months gone in national elections, then a very big state like Maharashtra, a very prolonged election, which was postponed a lot. And, when 14-15% of your GDP comes from one region and you're not spending there, that has an impact. So we have had underspending by the government, which has caused all these second order effects of lower aggregate demand, lower consumption, and also infrastructure spend not keeping up. So now we will be in a catch-up mode. These 3 months were expected to deliver something better. The second half was expected to be better. October did well, but November again did not perform that well. And let's see what the December numbers show. But the next 3 months will be critical for government expenditure to at least catch up near. And that 11 lakh crore infra spend will not happen. Now, like last year, 50,000 crores was left over. Let's see how much gets left over for this year. And that has an impact on the economic momentum. So I hope I answered all the questions, Nikunj.
Yes, perfectly fine. I just turn back to what is happening in the near term here. And in the near term today, I think there is a bit of a profit booking. Naresh, does that shake the bulls? Today's a big sell-off, because what we saw last week was like a sharp recovery from the day's low on Friday. And then we've seen a sharp sell-off from the day's high. So it's a bit of a mirror image. Tuesday is a bit of a mirror image of what we saw, let's say, on Friday.
So what we've seen is the same thing we saw in the previous week. We saw a recovery on Thursday. Next 5 sessions, we stayed in that band. And we are replicating the same move. Friday, we saw a very solid recovery, 500, 600 points from the low. And now we are fading it off. So It's been a problem in terms of no follow-up price action on the buy side as well as on the sell side. So in this period, we are stuck. It's a chop market wherein you get stopped out much more often on both the sides. Till the time we don't get beyond 24,200, 300 and 24,800, 900, it's going to be a market where you trade on the lower size and wait it out.
That's a take coming in on some of these stocks. Just taking stock of some of the other buzzers. In the last few minutes, Mahanagar Gas has taken a bit of a beating, so watch out for that. HFCL is the other one, and IGL2 is actually under pressure. So some of these energy names are on the back foot. Of course, to begin with, Reliance, Power Grid, NTPC, they were down in any case. Now the gas companies are also giving company. Even Oil India is down. So clearly that as a pack is on the back foot, and so is the entire financials. So the Srirams and SBFC of the world, the L&T Financial Holdings, even banks like Bandhan Bank, Bank of India, RBL, they're all down and out, a cut of anywhere between 3 to 5%. On the gaining side, however, Jyoti CNC is doing quite well, 11% higher. This morning, there was that initiation note coming in on AFCONs as well. And to the point, Ajay, that you were making on, infrastructure and the capex spend, do you think if there is a pickup in the last quarter, some of these infrastructure companies might get to benefit as well?
Definitely. I think, out of the four pillars really drawing up the economy, the private consumption is not growing as fast as we would like to. Rural consumption is at about 5%, urban is at about 4.5% year on year. So not up to the mark. Your private capex is okay, but not that great again. Exports are not doing well, as yesterday's numbers on the November merchandise exports showed. Service exports are doing well, but merchandise exports are suffering. And that leaves the fourth pillar, the government capex. And high hopes from there, Nisha, that this will come through. And there will be, expenditure from the government, and at least some big projects being announced, be it in railways, be it in defense, be it on the infrastructure side, construction side. So that's one lever that's available for the government. Apart from giving some GST breather and trying to boost the consumption economy, or on Feb 1st, giving some tax rebates. This misnomer that a 15 lakh per annum person is rich in India, that sits at the heart of this consumption issue. Overall, there is a 70-80% huge segment which is very, mass as such. But you get slightly affluent. If you can put more money into those pockets, you get a kicker for the economy immediately. It's like the infra spend gets you a 4 or 5 times. Every rupee that you spend in infra gets you 4 or 5 times of rupees in the GDP in a growing economy like India. Same way on consumption. If you give the affluent class some more money in their pocket, you see that kicker. If you give it as a dole out, that gets saved, or that goes into paying off outstanding loan or something else. It does not come back immediately into the consumption. So I hope some smart moves are made in the budget and some tax relief is given. That is much needed to take the economy back into that 7.5–8% real growth trajectory. And along with that, of course, the infra. But I think at 11 lakh crores, we have reached our capacity to spend. I don't think in the present setup we can spend more than that. So probably we'll have to keep that same number, which could be a disappointment on 1st February.
Samir is ready, and Samir's got details on what SpiceJet is planning to do. Now, they've raised about 3,000 crores, and where are you joining from? This is a very interesting location in Delhi. Samir, where are you joining from?
So that's the BJP headquarters, and over here all the policymakers, they come and then they decide that how they want to take it forward. Though it is a political party headquarters, but the cabinet ministers from the BJP, they come in and they discuss the roadmap for the party, for the government's performance as well. So that's a BJP headquarters.
Okay, SpiceJet. Samir, what do you have for our viewers? So SpiceJet has got cash on the balance sheet, 3,000 crore, which means the benefits of operating leverage and financial leverage should kick in now.
Definitely, sir. So now SpiceJet Airline is looking to revive its fortune after raising rupees 3,000 crore through QIP in the month of September. And they have formulated a three-way strategy. The first is to improve their financials, and they have set a target to become a cash flow positive company by March 2025. And in the same direction, they have cleared the statutory dues or the liabilities up to 70%, whether it be related to the employees' salary, the PF dues, the GST or the TDS. So largely they have cleared the liabilities. Still around 30% is left, and they are looking to clear it off by next year. The second is related to the fleet expansion. So SpiceJet Airline, once it was struggling to remain afloat, and then they were having just 21 aircraft, but now they are having 28 aircraft, and they are also having 25 grounded aircraft. So to revive the grounded aircraft, SpiceJet will be infusing rupees 800 crore, but they have set a target to get 35 aircraft by March 2025, and then the larger goal is to have 70 aircraft by FY 2026 and 100 aircraft fleet size by 2027. That's the larger goal that they have set in. In terms of fleet expansion, quite ambitious, but in addition to this, they are also looking to expand their footprints in flight frequency, not just at the domestic front, but also on the international sector. When it comes to the international part, so SpiceJet has got some exclusive right to the Middle Eastern destination. They ceased to operate because of the non-availability of aircraft, but now as the situation improves, they are looking to expand the flight frequency. Also, they are looking to increase the numbers, the flight numbers under Udan Yojana, the regional connectivity scheme. One more interesting move that we will see from SpiceJet in coming year 2025, that they will be starting seaplane operation. This will get a boost from the tourism sector as well. So seaplane operations on selective exclusive route, whether it be Shillong, Guwahati, Lakshadweep, or even in Gujarat. And for the same, they have also developed a venture with the seaplane operating company De Havilland. So that's the interesting move that we can see from SpiceJet. Overall, if you see, they are looking to improve financials. They are settling their dues with the aircraft lessors and vendors. For example, in the last 2 to 3 months, they have settled the dues with the aircraft lessors. That was earlier claim was made of around that was $260 million, and they have paid just around $52 million to settle the dues. So they are settling the dues. They are looking to improve the overall performance of the airline, and then they are hopeful that in coming years they will be able to have a significant chunk in the growth of India's aviation sector.
At tapping into the India's aviation sector yet again, and on a plan to perhaps take off again. That's the view coming in on SpiceJet and what they have in store. In the meantime, Five-Star business is actually doing quite well. It's managed to perk up around 5%. Remember that entire MFI and the MSME lending space was going through its own trouble, but Five-Star has managed to see a bit of a bounce back. Kunal, anything on the charts that you would want to talk about, Five-Star business?
So don't track the stock of on a very closer basis, but I think looking at the charts for the last 2 days, it indicates that maybe I think we could be looking at a bounce back of sorts for the stock from a recent sell-off from 950, 930 levels towards a point when the stock had come down to 620. So almost like a 300-pointer correction for the stock in the last 1 month, and now we're seeing a 100-pointer bounce from those 620-30 levels for Five-Star. So we need to see whether this an initial price action move backed on the back of volumes, if that subsides, whether the stock corrects back again on the lower side or whether it just consolidates. And if that happens, if the consolidation happens, then that could be considered to be positive for Five-Star. So maybe more of a wait and watch at current levels.
Okay, and any view, Naresh, that you have on L&T housing as well as PNB housing?
So both of these themes have gone sideways after the initial recovery. So would wait it out, say if we start sustaining, say PNB housing start sustaining above the recent highs, which was closer to that 980 mark, then it becomes interesting. It's made a base around 850 to 3 bottoms around this area. So 980 crosses, we get positive. Same way L&T Finance, so that would be a number at 151, 152. Till that point of time, it looks like a base building formation on both these names.
Okay, that's the take coming in. We'll take the BTSC trades as well from our technical experts. So Kunal, what's the BTSC idea?
It's STBT from my side. So two sell calls. The first one is a sell on RBL Bank. that's a definite candidate for weakness, because the stock is confirming a return or reversal back again from its 50-day moving average. So would suggest a target of 160 on the downside, stop loss at 172. And the second would be a sell on MGL. The stock had completed a gap or a positive downward gap for itself. Now it's coming back into a retracement mode on the downside. So would look out for targets in the range of 1200, 1220 and stop loss to be kept at 1264.
Okay, incidentally, for RBL Bank, what also is weighing on the stock is the latest commentary coming in after the meeting with, Citi analysts, because they're talking about a modest low double-digit growth versus 15% growth that they talked about earlier. So that guidance cut is also weighing heavy. But Naresh, what do you have for us, BTST or STBT?
So one BTST and one STBT, contrarian trades both. First is the one Reliance Industries, hardly any bounce from the recent lows. I would expect it to hold the recent bottom. So stop loss at 1230, target price of 1275. Second is the sell on Indian hotels, which has continued one way overbought and seeing some bit of a pause today. Would be a stop loss at 885, target price of 860.
Point taken. Before I hand it over to Snehi, Mr. Bagga, last question from you as far as the real estate pack is concerned. There seems to be a bit of a dichotomy. If you ask people, they don't want to buy real estate and they say that the prices are not good enough to sell it. But if you're talking to a developer, they are very happy with the kind of sales they are witnessing. What's your take?
Yeah, what you see, especially on the premium segments, multiple hundreds of crores of sales happen on opening day. That, it takes a lot of work by the brokers in the background, and they collect, token checks, and then there's a big announcement made that the entire project got sold out. So it is a good amount of marketing happening. But on the ground, what we have seen, it's been a great year. Again, nearly 5.7 lakh crore houses getting registered this year. So real estate has had a great year. The sector has done very well. It's one of the top performing sectors for the year. As the rates come down next year, hopefully RBI starts a rate cutting cycle by February, the sector should benefit. Again, the clean out has happened in the sector. So from some 27,000 mom and pop developers all across the country, we are boiled down to a few hundred, and out of which we get a few which are listed, good clean balance sheets. These are the survivors who are really now picking off most of the juicy fruit. So it is a good sector to be in, and still at about year 3 of a 10-13 year cycle that you normally see in real estate. Valuations always remains an issue, but it is a game of being able to get those customers, and there, thanks to the housing finance companies, the availability of finance, it's become more of an EMI game, and affordability that way has.
Okay, Mr. Bagga, thanks so much for joining us. On that note, we'll let you and Naresh go. Naresh, thanks for joining us as well. With that, let's wrap it up on today's trading session. Take a look at how we've ended the day. And it's been a quiet, horrible Tuesday, if you could call it that. Trepid Tuesday coming in for our street, because take a look at the Nifty, even below that 24,350 mark. Very weak show coming in today from the Nifty, a 350 point cut, 1.5% almost intraday cut coming in just for the Nifty itself. Sensex following suit, 1.3% cut coming in, but holding on above that 80,500 mark. Broader markets also did not do all that much in today's trading session. Let's pull up the broader markets. Nifty mid-cap down 0.7%. Nifty small-cap also, in fact, following suit, 0.7% cut coming over there as well. Advanced decline ratio steeply in the favor of the declines on all of this. India weak spiked up 4.5%, so that was also looking weak today. Quickly taking you through some sectoral gainers and losers. No gainers in today's trade. All the sectors have ended in the red. You had, till the highest point of the trading day, you had media and realty that were in the green. However, even they have flipped over to the red. Nifty PSU Bank is your biggest loser, followed by Nifty Bank. You have Nifty Metal, Energy, Pharma, IT, FMCG, Realty in that pecking order from your biggest to the smallest losers today, but none of them in the green. Quickly taking you through some of the packs that were abuzz today. The entire fertilizer packed, FACT, RCF, National Fur, GSFC. Good moves coming across here. RBL slight weakness. ITC on the back of that demerger from 1st Jan of the hotels biz. That stock was abuzz today.
TARC was down by 10% in lower circuit on the back of that SEBI inquiry of the forensic team. HDFC Bank, second consecutive SEBI notice, that stock was under pressure. You had on the back of brokerages, Piramal Pharma, Quest Corp, USL, Cholamandalam. The first three were doing pretty well. Cholamandalam was bucking the trend today. Asian Paints and Berger Paints also sell note coming in from Investec. That's how we've wrapped up for the day. Then on the markets, 1.4% lower, even below 24,350 is how we've shut shop. We can only buckle up and hope for a better trading session tomorrow.